Concerned me for quite a while. I've been interested in why banking will destroy just about anything it touches. I've had a lot of friends who are into the economics of the world try to explain this to me, and they've laid out graphs and all kinds of stuff. By the time I get done, I have such a headache I can't see straight. It took me a while to figure out how to explain this pretty straightforward. Once again, I'd like to talk to you about why I think banking will destroy anything it touches. And that will bring me eventually around, hopefully, to the national debt and my concerns about whether we can or can't pay for the national debt. Anyways, in essence, there's only so much money in the world. Yeah, I know we can print some and it goes up and down, and so does inflation and a bunch of other stuff. Basically, there's only so much money in the world. So let's try not to overcomplicate this by thinking about all the details. Let's not get too close to the forest that all we can see is one of the trees. In essence, only so much money. In essence, only so many people. So let's take some really simple numbers to understand. Let's say there's only $1,000 in the entire economy, and let's say there's only 10 people in the entire economy. That's the whole world. 10 people, $1,000. Don't overcomplicate it, all right? So here's what we're gonna do. We're gonna assume this is a democratic world, and everybody starts out with an even $100 apiece. So we each got our $100 to play with. We each are going out and trying to decide what we're gonna do with our $100, how we're gonna handle the world, what it's gonna be all about. So one guy says, I'm going to be a banker. I'm going to take my $100 and I'm going to loan it out to anybody that wants to borrow it from me. So he says, all right, well, that's kind of cool. If you've done the math, 6% interest, 30 years, you pay back triple what you borrow. So he takes his $100 and over 30 years, he turns it into $300. Now this is a world that only has $1,000 and 10 people. So that's a fair amount of money. He says, that was fun. He says, I'm going to do it again. I'm going to take my money. I'm going to loan it out one more time. And he takes his $300 and he loans it out. 30 years later, he's collected $900 in a world that only has $1,000. Okay, interest, that interest is going to destroy anything it touches. At this point, people only have $10 to play with. They're all desperate for a loan. They say, I need a loan really bad. I got to get some money. So they run out and they borrow money from this guy again. All right. Well, at the end of 30 years, he does a little prediction. He realizes he's going to be owed $2,700 in a world that only has $1,000. Interest, the payment of interest, will destroy any system it touches. That's kind of scary. All right. And you say, so, I mean, how's that affect me? Well, we've got a national debt. We're trying to figure out how to pay this national debt. There's a fascinating website out there called usdebtclock.org. Go look at it. Take a calculator. It's kind of fun. A lot of people talk about the numbers you see on this site, but they usually only talk about them one or two numbers at a time. So you kind of get a distorted idea of what's going on. And then when people say that T word, everyone freaks out because trillion is a number that you can't quite fathom. It's hard to hang on to how much money that really is. There's some interesting attempts to show you how much money $1 trillion is on YouTube. All right, it's interesting to go look at. But I'm going to try to avoid the trillion thing because it's a big number. So let's just say I'm going to talk in the fourth comma, the fourth space out there. So when I say $10, I'm talking $10 trillion. When I say $5, I'm talking $5 trillion, okay? Now, if I say 0.1, I might also say 10 cents. All right, so I'm trying to bring it into numbers that you can kind of wrap your head around to give you an idea of what's going on. U.S. national debt at this point is $17.56. All right. According to this, the U.S. gross domestic product, how much money we actually produce, things we go through, is only 16 trillion. Or $16. Got it wrong, sorry, didn't mean to scare you. Okay, so we're going through trying to figure out why this is important. And you look at all these numbers, it's amazing to deal with them. All right, we're talking 17.5 for U.S. national debt. We're talking the interest, total paid interest on this loan so far has been 2.5. All right, still working on the fourth decimal, fourth comma. All right, total personal, this is debt held by us, anything from, well, personal debt, credit cards and that kind of stuff, car loans, I guess, is 16. Mortgage debt, according to this, is 13. This is total across the board U.S. Student loans, which I always thought was a little bit bigger, but it's $1. All right, $1. All right. Credit and debit cards. This one kind of caught me a little off guard. It's 85 cents, so it's 0.8. So we go through all those. Huge numbers, big numbers. All right, remember the thing I just told you about the $2,700 in a world that only has $1,000? According to this website, our total monetary, all the money we've got, every cent, all right, is 3.9. Okay, we have $3.9 dollars, if you know what I mean. All right. So how do you pay a total U.S. debt, all right, everything, of $61, and all you've got is 3.9? If you took the entire amount of money we've got, just the cash, just the greenbacks, and you took them all down to the bank and you said, here you go, we're going to like to pay on our debt. This is all debt, public and private, all of it. All right? The bank would say, that's nice. Where's the rest? All right? We're going to say, but we just destroyed our economy. We've taken every dollar that exists, we've given it to you, and you want more. Well, you agreed to pay for it. Cough it up. All right? Our government, how much money would our government have to print? We would have to, what, almost 20 times? Am I doing that right? Times our money. We'd have to print more money. Everyone says, oh, it's not a problem. We can pay for the debt. No big deal. All we got to do is print more money. All right, my understanding is that when the Americas print more money, the first thing we do is we give it to the bank. And the bank can then use it to make loans to us. So we're going to go down to the bank and we're going to say, listen, we gave you our entire 3.9 in money to pay for our debts. All right, you want more, okay? So we told the government to print more. Apparently they gave it to you. Bank's going to say, ha, but would you like a loan? We'll give you a loan. How do we pay it off? My concern here, what I'm trying to do is I'm not trying to terrify you. I'm not trying to get people to freak out. I'm not trying to start a fight. I am an average, nothing special guy. I've spent a little time with a calculator looking at numbers on the internet, and I'm concerned about how America is going to survive. I want to start a conversation, a positive-based conversation of how we're going to do this. This is a big deal. It's not the biggest. There's one bigger, which is a little bit scary. This is the second biggest, in my opinion. All right? That debt is going to eat us alive. There's bankruptcy attorneys all over the place that would basically tell you if you've got that, you should just go in debt. You should go bankrupt and just give it up. I don't know. It's an interesting thought. Don't know how that works. I know there's some rules and some laws against it. Not familiar with all of them. It would create a terrible fiasco. But if we owe 61 and all we've got is 3.9, well, let me give you an example here, all right? Monopoly. It's an interesting game. Monopoly is a fascinating game. The idea of Monopoly is we all start out on a board. We're all given a common place to start. We're all given the same amount of money. We're all given a place to play. And we sit down with this money and we say, all right, I'm going to play Monopoly. And then we roll the dice and we see what happens. Eventually somebody loses. In the game of Monopoly, you lose when you no longer have all your houses, you don't have any property, you don't have any money. All right, so what do you do in Monopoly? You get up, you go to the kitchen, and you have some tea, and you wait for others to be in the same position you're in. What happens in real life? You go live under a bridge. All right, you find yourself camping out on a friend or family member's couch. You don't have that option of waiting in the kitchen with a glass of iced tea. All right, so the question is, eventually somebody else will lose, and eventually somebody else will lose, and depending on how many people you're playing with, eventually you'll be down to one player, one person who has it all. They have all the money, they have all the cards, they have everything. And you know what you do at that point? You fold the game up and you put it back in the box because there's no economy left. It's done. when you only have one person with all the money, that 1% that everyone seems to be talking about, you no longer have an economy. How do we get out of this? What's the right answer? You know, America is about all of us. It's not about me. It's not about you. It's not about somebody else down the street. It's about all of us surviving. United we stand. Until we get united and figure out an answer that all of us can live with, this is going to be a problem. Oh, God. If you can't tell, it really bothers me, all right? I'm trying to find an answer for this. I don't want people to go, oh, yeah, well, you didn't, or you think that's bad, look over here. You know, no. Let's find an answer. I want to start a constructive conversation about how to make the system work. You want to create a financial system, a financial monopoly game, if you will, that no one ever runs out of money. Because the people who run out of money, well, they're in the street. I mean, we're all eventually going to end up in the street. Well, one or two people, you know, end up with all of it. I mean, it gets there eventually. It doesn't really have much choice. I don't know about you, but every year I've been alive, my financial situation appears to be getting worse, not better. So I'm just looking for a way for us all to win. Part of what I find interesting in these numbers again is the total purchase price, the asset value of America, which is fascinating to me. All right, if you take a look in here, towards the bottom of this, it says that small business assets is 8.8, corporate assets is 20.5, household assets, and this one kind of surprised me, it's actually bigger, household assets is 83.7. I'm still working in the same T place on my decimal point, all right, which means if you walked in with $113, all right, you could purchase all the assets of America. And yet, according to this, the same site, we're 61 in debt. And we only have 3.9 to pay it off with. How do you do that? The numbers don't add up. Now there's, like I said, there's one worse, one's a little more scary. In here, this is saying that we have Federal Reserve monetary base, that's our money, 3.9. All right, then it says M2 money supply. What I'm understanding is this is how much the bank says we have in our savings accounts and all of our money added together, plus the 3.9. So it's saying we have, what, almost triple? Yeah, about triple what we actually do have. Well, everyone says, I know how that works. The bank loans money out to other people so they can build houses. You know, it's all out there. No, if it was all out there, then when the bank loaned it out, it would be somewhere else. All right, it wouldn't be in our savings accounts. It'd be somewhere else. So this doesn't make sense. Is the bank manipulating numbers? Someone needs to explain to me why the M2 money supply is 11.2 and the actual monetary base is 3.9. That one baffles me a smidge. Treasury securities, which is fascinating. That's a whole nother game, is 1.6. But here's the one that freaks me out. I've been looking at this site for quite a while, and back a while ago it talked about value on paper, and that ended up being stocks, bonds, certificates, dividends, all that kind of garbage, and that was about $800. So if you were to cash out the stock market, if you were to take all the money that's available in the stock market with all those certificates, if you took them and turned them all into greenbacks, we'd have to use 3.9 to pay almost 800 in what's out there. And what's happened is that number has gone away. It's no longer part of this. But this new one has appeared in the currency section, which is derivatives, currency and credit derivatives. Okay, it's hard to find out what a derivative is. I've done a little bit of research. I'm assuming that what's happened, well, what it says is that a derivative is an insurance policy between two people doing business. The stock market is two people doing business. It's the people who hold the stock and being told what it's worth, and the people who have the money. Anyways, I don't know for sure. It gets confusing trying to figure all that out. But our government has agreed to insure $738 of money, okay, when we've only got a total of 3.9, okay, and a complete asset value, a total asset value, what did I say it was? Oh, I saw it in there. About 11? Yeah, about 1,100. I don't see it right now because I moved the screen. So how do you, if our total assets are 1/7 the amount of money they're agreeing to pay back, how do you deal with that? So that's a really big one. I don't have enough information to really get down to that, but somehow we're insuring $734 when we only have 3.9 to actually work with. So I think that one's a little bit bigger, but I know less about it because it's a faster change. I'm pretty sure it's the payoff amount of all the stocks and bonds or certificates, which starts to worry me even more because I've got money tied up in that retirement system. And if that's right, a very small percentage of those people are going to say, hey, want my money. And guess what? This bothers me. This scares me. What I'm seeing is frustrating to me. And like I said, I'm not trying to freak you out. I'm trying to find people who have some answers, people who can explain how this is supposed to work. Not somebody who's being paid by the other side to try to calm us all down, to give us information that we think we want. I want someone who can really scratch out some serious numbers, taking into consideration all the possibilities. If we don't fix this, it's going to hurt eventually. I don't know when. Something's going to happen. Eventually we're going to figure out maybe the king isn't wearing any clothes, if you've ever read that story. All right, it's an issue, and it's a fairly big one. So, once again, if you hear anything other than a frustrated American trying to figure out where his country is going and what's happening to it and how it's being handled, then you misunderstood me. I'm not trying to freak you out. I'm just trying to find a real answer, not something buried in politics, not something that's trying to make people feel good, a process that we can actually use to fix this so that our country will continue to exist, and then we'll have the right to pursue our ideas of happiness. Because if we're not financially stable, it ain't going to happen. Oh well. Talk to me. Something real.